Fantastic article about Netflix in the Financial Times. The July 4th arrival of the third series of Stranger Things was the biggest content drop of 2019 for Netflix. If any one piece of content would make a difference on subscriber additions, that should be the one. He was right. Global subscriber numbers spiked in the first 2 weeks of July. Unfortunately for Netflix, it was 2 weeks too late. I'm a big buyer of Netflix on this retracement. The market wiped $17 billion of Netflix's stock value overnight, emphasizing the brutal correction between new subscribers and stock market value. The company is predicting 7 million new subscribers in the third quarter. Everyone focused on the US where it lost subscribers, but it's not a US story anymore. It's a global story. Netflix spearheaded a streaming revolution that changed the way we watch TV and films. Cable TV lost subscribers, Netflix gained them, putting it in a category with Facebook, Amazon and Google as one of the adored US tech stocks that led a historic bull market. Company spends more than 70% of revenues on content. Analysts estimate that would give it a budget of more than $15 billion this year, more than any other media company. Yet Netflix projects it will spend $3.5 billion more than it will generate in cash in 2019, while promising that this mismatch will narrow over time. Netflix has taken on the vast majority of its $12 billion in long-term debt in the past 3 years, as it almost doubled its global subscriber base to 150 million. I'm looking for $1 billion. So that's why I think it's a huge growth story. In an environment of historic low interest rates, investors searching for yield have happily gobbled up Netflix bonds. People wondered why they were paying so much, but in hindsight it now looked smart. As a senior film and television banker, they were building a following ahead of an arms race. Today Netflix faces an onslaught of competition in the market it invented. After years of false starts, Apple is planning to launch a streaming service. They've announced it. I think they're going to buy Netflix once Tim Cook wakes up and smells the coffee. Disney with AT&T's Warner Media and Comcast, NBC Universal to follow early next year. They all have extensive back catalogs, but it's not about your back catalog, right? It's about fresh content. After raising prices in the US earlier this year, a standard Netflix subscription now costs $13 a month, Apple $5 a month, Disney $7 a month. So I think there's room here, and this is what's being underestimated by the market, for people to have 1 or 2 subscriptions, right? Every quarter felt like a year in which Disney and Fox weren't in the game. The feeling was that we are leap years ahead, and it's kind of true. Netflix first invaded US living rooms with its video streaming in 2007, take another 6 years before it made a big splash with its own shows. Paid $100 million for 2 seasons of the political thriller House of Cards, which debuted in 2013 to widespread acclaim. Streaming wars have spawned a phenomenon known as peak TV, with bankers saying there has not been as much capital in Hollywood since the mid-2000s. Even after the loss of subscribers in the second quarter, Ben Swinburne, head of media research at Morgan Stanley, says Netflix is still on course for a record year of subscriber additions. Optimists point to the group's global reach. It is betting its future on expansion outside the US, where it has already attracted 60 million subscribers, investing heavily in content in places like India and Malaysia with a focus on local language programming. For now, the stock market appears to be siding with the critics. Netflix's shares have sunk further since its July slide, touching an 8-month low. That values the company at $127 billion. It's a buy. 285, 286. Snaffle it up.